Good afternoon, ladies and gentlemen, and welcome to the Q4 FY2023-24 earnings call of Sarthak Metals Limited, hosted by AlphaStreet. This is Radhakrishnan Chonat from AlphaStreet, and it's an absolute pleasure to host Sarthak Metals Limited for their quarterly earnings results conference call. From the management side, we have Mr. Sagar Shah, Vice President and also part of the promoter group. Ladies and gentlemen, as a reminder, today's call is being recorded. For professional investors, we are live streaming this audio along with the live streamed transcript on our alphastreet.com platform. A replay audio of this call will be made available on alphastreet.com as well as on our AlphaStreet India YouTube channel. A final transcript will be made available shortly afterwards on AlphaStreet's platform. Now, before we begin, let me read the forward-looking statements and disclaimers. Certain statements in this call may contain statements regarding the company's market opportunity and business prospects that are individually and collectively forward-looking statements. Such forward-looking statements are subject to certain risks and uncertainties like government actions, local, political, or economic developments, technological risks, and many other factors that could cause the actual results to differ materially from those contemplated by the relevant forward-looking statements. The company will not be in any way responsible for any action taken based on such statements and undertakes no obligation to publicly update these forward-looking statements to reflect subsequent events or circumstances. With that said, may I now request Mr. Sagar Shah to take you through the presentation. Post that, we can start with the Q&A session. Over to you, Mr. Sagar.
Yeah, hi. Thank you, Radhakrishnan, and thanks everyone for joining our call. Some of you have been attending our earnings call regularly, and I'm glad you could join for this quarterly call as well. Okay, so before we discuss the FY24 results, let us take a few steps backward and talk about our incredible 30-year-long business journey. The journey that survived economic downturns like wars and oil supply shocks, even global financial crisis, inflation, and COVID pandemic to emerge as a strong market leader in the business of niche steel consumables. Our investors should be glad to know that we made a profit in every single year of our operation. A sharp drop in profits of steel majors do not necessarily mean a similar profitability hit for Sarthak Metals. Our revenues and profit might have remained subdued in the last year, but the business model is resilient to provide comfort for long-term investors. Talking about our investors, they have, in fact, reasons to be delighted. Along with regular dividends, our share price appreciation has handsomely rewarded them since our listing in the main board. While the share prices have pulled back in recent times, we sincerely believe that there is lots to come. Our investor community has been growing leaps and bounds over the years, emphasizing the growing faith of investors in our business. From just under 2,500 investors at the time of listing in November 2021, today we have close to 11,000 investors, including some HNIs from India and abroad. Now, before we move on to discuss the Q4 results, I would like to take you back in time when we began our journey in a humble way in 1995 when we sold industrial oxygen unit in the vicinity of Bhilai. In 2002, we took some brave steps sensing potential in the Indian economy and its crying need for steel to bolster its future. With a lot of conviction, we set up our first cold wire mill catering to the metallurgical industry, that too in the period of downturn. Our timing could not have been better as the economy clocked 8% growth rates after that for many years, and we grew along with it. Cold wires are a product of wire injection technology of steels, whereby steel tubes are filled with various alloys and injected into the molten metal for uniform and homogeneous mixing. They are an indispensable part of steel treatment today. Over the years, we have built strong relationships with major steel manufacturers in the country and garnered 30% plus market share in the country from our 11 products. We currently have capacity to produce 10,000 tons per annum. Emboldened by our success in code wires, we diversified our product into trading aluminum flipping coils in 2008 and manufacturing later in 2018. Aluminum flipping coils are used in the steel manufacturing process for deoxidizing and also act as an alloy for making specialized steel. Over the years, we have won the confidence of major steel producers. Today, we have a capacity to produce 15,000 tons annually and are market leaders in both code wire and aluminum flipping coils. The year 2017 marked a significant milestone for us when we successfully listed on the BSE SME platform by raising funds through an IPO. With your support and encouragement, within a span of 4 years, we transitioned to the main board platform of BSE and NSE. With our core business of code wire and aluminum flipping coils strategically well placed with sufficient moats, we started scouting for other products in 2023 for the long-term sustainability growth of the company. That is when we saw a big import substitution opportunity in the flux code wire business, the first product category for the company beyond metallurgy. Flux core arc welding is a type of welding process finding applications in fabrication workshops, construction, shipbuilding, and many other promising industries. With encouraging initial results, we recently increased our production capacity by 3 times. We now have capacity to produce only 2,500 tons of flux code wires with provision to ramp it up to 10,000 tons from additional lines. This is a rupees 300 to 400 crore market size in India, growing at a rapid clip. Historically, we have managed capital prudently, benefiting investors from our superior return on capital and equity ratios. In our quest to continue doing that, in 2024, we announced entry into the lucrative biotechnology sector. We ventured into it after a lot of background study. A pilot plant study facility has been now put up in Nagpur for our continuous R&D in this field and rapid technology adoption. We have identified a big opportunity in the industrial enzymes and allied healthcare, nutrition, and dietary supplements. It shows immense potential as it is very scarcely penetrated in the Indian market as of now, and the government is also very keen on the sector to drive towards a more sustainable future. Besides, there is a tremendous export potential in the global enzymes market. Our mission going forward is to build a technological-driven division for our company, which holds the potential to become the headline for the company in the future. Now coming to the specifics in Q4, the Indian steel industry continued to face challenges. Chinese steel producers have been exporting steel to India and other countries to counter poor domestic demand, which in turn has reduced steel prices in India. India, as a result, has become a net importer of steel in FY24, as against being a net exporter a year before. In the face of a continuing challenging environment, we managed to slightly improve our margins during the fourth quarter of 2023 and 2024 as compared to a quarter back. The silver lining is that prices of different ferroalloys are now moving up. In fact, in the month of April itself, the commodity prices have moved up almost 20%. Steel demand from the auto and infrastructure industry remains strong as well. In terms of key products, the code wire segment witnessed increasing competition, but the overall industry dynamics remain strong. Our strategy in the code wire business continues to be to gain market share in high value, high margin products. Our other product, the aluminum flipping coil, showed a subdued performance during the fourth quarter. Due to supply chain disruptions, our costs went up, which could not be fully covered from our sales. However, we expect it to be a temporary phenomenon. Demand is strong, but its margins are likely to be affected in future if the shortage of scrap continues. Kenya has recently banned export of scrap, which will continue to put pressure on global secondary aluminium availability. In the new business of flux core wire, the fourth quarter of FY24 was in line with our expectations. We managed to gain more customers in our grade of carbon steel fabrication while actively looking at newer grades for other application areas. The fabrication industry looks very promising and our brand boasts superior quality and service, resulting in increasing market share. As mentioned earlier, we have increased our production capacity 3x, which will start reflecting in revenues from the second quarter of FY25. We are confident in building a customer base to achieve a total revenue of approximately rupees 10 crores in FY25 and potentially increase it to rupees 100 crores by FY28. In the biotechnology division, the pilot facility put up at Nagpur recently is functioning well and our R&D activities are quite efficient. We are working on interesting biotechnology applications like for water treatment, alternative energy, and health and hygiene. It is going to be interesting to implement some technologies in these areas. We are likely to start clocking revenues in this division from second half of FY25. Even in the face of a challenging industry environment, our core business has stood as a pillar of strength. It has stood the test of time, reporting profits across multiple business cycles and tough environments. With India aiming to triple its domestic steel production to 500 million tons a year by 2047, long-term growth in our core business is expected to be steady. At the overall level, cold wire and aluminium flipping coil will continue to grow at industry rates while new businesses provide additional kickers. While business environments will continue to get better or worse, we would continue in our effort to create maximum shareholder value through sustainable and robust business strategies as we have done in the last 30 years of operations. With this, I conclude my talk and throw open the forum for questions. Thank you.
Thank you, Mr. Sagar. We'll now move into our question and answer session. Today, we have participants joining via the Zoom webinar platform and also via our telecalling platform. Now, participants who have joined us and connected via the Zoom platform can also pose their questions directly to me on the chat box and we'll ask the questions on your behalf. Alternatively, if you wish to ask a question directly, kindly use the raise hand functionality. I'll take the first few questions that we have received from the chat box, as well as questions we have received via email earlier and through our AlphaStreet platform. And then we'll open it up for participants to ask questions directly. Once again, as a reminder, ladies and gentlemen, please use the raise hand functionality if you would want to ask a question directly. Let me start with the questions that we have received via chat and email first. The first question is, can you explain the factors behind the 12.5% year-over-year decline in total revenue for Q4, especially in the cold wired and aluminium segments? What actions are you taking to address these issues in the upcoming quarters?
Okay, so there are three things that I can realize. One is increasing competition. Second is dip in realization for sure, and overall subdued demand. One reason being, since it was the end of financial year, the quarter 4, it is generally seen as a lower inventory time period for our customers. And secondly, the flow of imported steel has put pressure on domestic steel production, which is why we've seen a dip in the revenue.
Thank you, Sagar. The next question is, how has Sarthak Metals benefited from industry consolidation in the cold wires market to improve gross margins and strengthen its market position?
Being the pioneers in the industry, our company is known for its service and quality. Today, the relationship we hold with our clients is unparalleled when compared to the peer companies, and that gives us the pricing power to improve. It helps us to improve our margins and increase market share where it's required.
Thank you. The next question via the chat window is, can you discuss your strategic partnerships with larger steel companies and how these have helped secure steady demand and improve the pricing power?
Sure. So having a constant presence of our technicians in the shop floor of steel processing units gives us an inside look of the industry and helps us strengthen our relationship with key managerial authorities, which often helps us with steady flow of orders, which in turn helps us in pricing power.
Thank you, Sagar. Next question we have received is, what is the current utilization rate of your core business segments and what strategies are in place to boost it for optimal revenue generation?
We are currently at 50-60 odd percentage utilization rate of our core business segments. To optimize this utilization rate, I feel right place, being at the right time is the only way to boost the utilization with having no negative and only positive impact on the margin profile. Because as a company, we've always believed in keeping our margin profile intact.
Thank you, Sagar. We have a couple more questions coming in, as well as I see a few raised hands. Let's finish the chat questions and then we'll come to you. Ladies and gentlemen, as a reminder, if you want to ask a question directly, please use the raise hand functionality. The next question is regarding industrial enzymes. Which specific applications in this market show the most promise and what drives this potential? How does the company intend to capture market share in these areas?
The most promising area is definitely biofuel and alternate energy. We are already in collaboration with the reputed Government Technology Center, which gives us a strong credibility to enter the segment. Along with it, our growing interest in the field of technology, biotechnology, is opening doors for more avenues to look at. Like water treatment is one area we are highly interested in, animal and human health, and home care segment.
Thank you. Next one is, can you outline the strategy for entering the nutraceuticals market? What are the primary product categories being focused on and how are market trends supporting this direction?
Market trends are definitely supporting this direction because the growing awareness of a healthy life is directly benefiting the nutraceuticals market. We have on board with us some key personnel having vast experience in the field of food technology. We have a fair idea of how to play along with functional and health ingredients, which hold a lot of importance in the nutraceutical market. We don't have anything specific product in mind right now, but we're working on it.
Thank you, Sagar. We have a few more chat questions. The next one is, what are the main risks currently affecting Sarthak Metals operation and its supply chain, and what measures have been enacted to ensure continuous business operations?
So main risks are coming from the aluminium sector. Competition is growing rapidly. But more than that, what is affecting our daily activity is the much disrupted supply chain of secondary aluminium, which is our main raw material, and the growing unethical approach of the different category players in this commodity sector. This poses some level of challenge in the near term.
Thank you. The next question is, looking forward, what are the key strategic priorities and growth targets for Sarthak Metals in the medium to long term? And how does the company plan to seize emerging opportunities in the dynamic markets it operates within?
Okay. The company, as you know, is a proxy to the infrastructure growth story of the country. Rising steel demand will help us grow our core business steadily, provided the challenges, as mentioned earlier, are temporary. Along with it, we have a very strategic approach in making our company more technologically advanced. A strong balance sheet is one thing which gives us immense confidence and potential of exploring and diversifying in much more lucrative areas which can give the company a very good long-term outlook.
Thank you, Sagar. Now I'm going to open it up for participants who have raised their hands to ask questions directly. Ladies and gentlemen, as a reminder, please use the raise hand functionality to let us know of your interest. I'll call out your name and unmute the participant. Please, I request you to announce your name and company affiliation before asking any questions that you have, and try to limit yourself to 2 to 3 questions initially, and then you can come back in queue. Operators, please allow everyone to raise their hand, and let's start with Narendra Kahutia from Robo Capital. Narendra, please go ahead and ask your question.
Hi, sir. Am I audible?
Yes.
Yeah. Thanks for the opportunity. So my first question is that you mentioned that we aim to reach 100 crores in the flux wire segment in FY28, right? So that would be at the full 3x capacity. Am I correct?
Not even at the full 3x capacity. If we run the 3x capacity that now we have incorporated, if those 3 lines run at a full capacity, we'll be able to clock a turnover of around 35 to 40 crores.
Okay. So we are planning to expand it further?
Yes, for sure. If the market dynamics support us, like we have already ramped it up 3x, we have a plan to ramp it up till 10 lines.
Okay, perfect. So we can expect the 35-40 odd crores revenue next year itself. Am I correct?
Yes.
Okay, perfect. And what would be the margin profile of this product?
Margin profile won't be below 20% gross margin.
Okay. So is it a value-added product, or is it a commodity kind of product?
It is definitely not a commodity, since it's applied in highly technical areas. Fabrication units these days have like very high valuable items being fabricated, and they are very cautious about the quality that they are producing. So these products, which like the flux core wire, they hold a very high technical superiority, which will never get this product under a commodity basket. It will always have a sense of superiority, and we'll have a pricing power as well with it.
Okay, great. Second question is regarding our foray into the biotechnology segment, right? So what kind of revenue potential do we see from that, and what kind of capex are we expecting?
So I don't have specific numbers so as to mention for the capex levels, because we're still under planning stage. But to be very honest, the bioenzymes market feels very promising. It is highly profitable, firstly. But what we're realizing is its application areas are much more scalable than bioenzymes itself. So once we achieve that credibility in the biotechnology sector with playing around with microorganisms and bioenzymes, we are looking at much more scalable projects which has application of biotechnology in it.
Okay.
So that is what our approach is going to be.
Okay, understood. And lastly, what would be the growth for our core business? And on similar lines, would it be possible to go to the previous year's 10% kind of margins, or is the 6-7 odd percent the sustainable rate?
So honestly, our track record tells you that we've always grown at a pace of 5 to 10% CAGR till now. And the operating profit margin profile has also been intact around 10%, which I'm confident that we'll reach again to that level. Because if you've been following the company, we are always more intact towards having our profile margin profile, keeping that intact. So our next approach is again going to be not chasing orders which do not satisfy our business operations. So you will definitely see a growth in the profit margins.
Okay, perfect. Thank you so much, and all the best.
Yeah, thank you.
Thank you, Narendra. Ladies and gentlemen, once again, as a reminder, please use the raise hand functionality if you want to ask a question directly. Next, from the line of Rajesh Mangal Agrawal. Please go ahead, unmute yourself and please go ahead and ask your question.
Yeah, thanks for the opportunity. Hi, Sagar. Good afternoon.
Good afternoon.
Boss, our share price has been reduced almost 50% within 3 months. So what's your take on this?
My take on that would be nothing, honestly, because the increase in the share price as well as the decrease in the share price, we have nothing to do about it. And honestly, the increase in the share price was more of a given thing because the valuation at which our company was trading felt really low. But since the results are a little subdued after that, I feel the prices have come back and like contracted again.
See, from your opening remarks also, you have already told that you want to keep the investor interest also. Okay. And in your opening remark also, you have told that you want to maintain the margin profile. Okay.
Yes.
From the report, I see your sales quarter by quarter sales is reduced by 13%, whereas
Correct.
the PAT is reduced by 70%.
Mm-hmm.
And while comparing the quarter to quarter, the EBITDA margin last year, 23, is 9.7%, whereas current quarter is 3.74%.
Correct.
Okay. So what your take on this?
It is definitely because of aluminium. Aluminium is posing a lot of challenges to us, sir. And the supply chain is highly disrupted. The scrap prices today are close to the finished product prices. It is absolutely mind-boggling, and we are unable to understand what the final take on this, because scrap supplies from international outside India countries also is taking a lot of hit. Like the prices are like, regardless of what the LME is and regardless of what the finished product prices are, the scrap prices are unreasonably high. So that has affected our margin profiles a lot. And looking forward, if we continue to focus more on code wire, which holds this technological power, we are confident that we'll able to get back our profit margins to the earlier levels.
So you want to say that we will improve our margin in code wire and we will day by day lower production in aluminium.
For now, that's the strategy. We are definitely not chasing any aluminium orders, and till the situation improves, it will be, our strategy is going to be like that.
Correct. Thanks for the same. And what is the order in hand right now?
Order in hand right now, it's unclear, sir. I won't be able to reveal anything specific.
And what's your take on this first 2 months? See, in the first quarter, we have already completed April and May. So, how is the top line growth, etc.?
Subdued. Because aluminium, again, as I mentioned, we are really not looking forward to having aluminium, a lot of inflow of aluminium orders, because it's very unstable. The prices of aluminium are highly volatile, and the finished product of aluminium and the scrap prices are just unreasonable right now.
Okay. And you already spoke something about this biotech enzymes. So, how, as an investor, how we expect that this will contribute our company Sarthak Metals a lot?
So it is a highly lucrative area. If you look at biotechnology, it is very scarcely penetrated in India, firstly, and its application areas, like I mentioned, like water treatment, then alternate energies, then home care. Home care includes FMCG like laundry and detergents and cleaning, and also then health area. These are all areas which are upcoming. It's a tomorrow thing. Biotechnology is a tomorrow thing, and as a sector, as a company, when we look forward to venturing into biotechnology, we totally feel that it will give us a technological superiority, which will help. When I talk in terms of the share price, I feel that it will help our company hold a better valuation in terms of PE when compared to the original work, that traditional work that we're doing. It holds a lower PE because it comes under commodity and we don't have a sense of pricing power. All these factors we'll find it in biotechnology division.
Yeah, very nice, very nice. And you told that we are expecting the top line in second half of financial year 25 in biotech.
Yes.
Okay. All the best for the future endeavor. Thank you.
Thank you, Mr. Rajesh Mangal. Ladies and gentlemen, I'm going to give a few seconds to see if there are any more questions on the line. Again, if you have any questions, please use the raise hand functionality. Looks like Narendra has a follow-up question. Operator, please allow Narendra. Yes, Narendra, go ahead.
Hi, thanks for the follow-up. So just wanted to know that if we are not taking orders for the aluminum segment, right? So are we looking at a revenue loss in the segment in the next year, and would our revenues be somewhat same as this year? Just a broad idea if you could give us.
See, we can see a dip in revenues, but as a company, we have our eyes and ears always open. As I have mentioned in my earlier calls also, aluminum wire rod holds potential in two sectors. One is metallurgical, which is the steel industry, and the second is electrical sector. Electrical sector, as we all know, power is in huge demand. We have clients in that segment also, and we are in progressive talks with a few customers. And if something gets converted or something gets forward, we can definitely see incoming huge orders in that area also. Nothing is clear as of now, and when the time is right, we'll definitely be open about it.
So in case these talks don't go ahead as planned, so we could see a revenue dip next year, right?
For sure.
Okay, thank you so much.
Thank you, Narendra. I'm just seeing if there are any more questions. This will be your opportunity to raise the hand. Ladies and gentlemen, if you have any questions, please use the raise hand functionality. All right. Ladies and gentlemen, that's all the time we have allotted for today. Please send in your follow-up questions by email to us, and we'll follow up and get those answered by Sarthak Metals management.
Great. We're always here to answer all your queries, and we try to present our company as clearly as possible. So please reach out if any further queries, if you have any further queries.
Thank you, Sagar. And thank you all for joining us for the Sarthak Metals Limited Q4 FY23-24 earnings call. As a reminder, today's call was recorded. A replay of this call will be made available on AlphaStreet India's YouTube channel as well as on our alphastreet.com platform. A final transcript will be made available shortly on AlphaStreet's platform. Thank you everyone for joining the call.
Great. Goodbye.